Exactly. Yeah.
Awesome. All right, so I'm here with Sarah Eder. Sarah Eder is a full-time real estate investor, performance coach. She raises capital raising expert. She's been investing in multifamily real estate for about the last 5 years. She managed to quit her job in less than a year into her portfolio, into building that using none of her own money, which I think is really impressive. She has a passion for acquiring solid performing apartment building assets in North America and actually training the next generation, right, of real estate
Yeah.
investors to own financial freedom. And she's actually raised over eight-figure in capital to date and featured in Canadian Real Estate Wealth Magazine, Yahoo News, and a multitude of talk shows and podcasts and speaking events. So welcome, Sarah.
Awesome. Thank you so much for having me. It's great to be
Yeah,
here.
thanks for being here. I appreciate it. So let's dive a little bit deeper into, what got you into the real estate industry, into investing. There's a lot to unpack there, especially with you leaving your job and doing that with none of your own money. So
Yeah, absolutely. Yeah, it's something, my story is something I'm passionate talking about because it's something that I think my generation is struggling with right now. Back then, it was an issue. I think nowadays it's even more of an issue, just being a millennial and home ownership and financial literacy and financial freedom. I mean, I think those are topics we all talk about and maybe just don't necessarily think are attainable. And so I lived the typical millennial life, in debt, living in a basement apartment, wasn't really sure and I lived in the GTA. So for me, home ownership just always felt like a pipe dream. There was just no way. And it was actually a complete accident that I stumbled into real estate. I ended up taking on a part-time job at a property management company. And I wasn't in love with the tenant management aspect of things, but I got to meet a lot of the building owners that we were managing for. And it was so cool because these people were not multimillionaires. So I had this like misconception that you had to have millions of dollars and then invest in real estate. But these people were nurses, police officers, like just like everyday, kind of working professionals. And it just blew my mind that they owned all of this real estate. And I was like, how did you guys do this? And it was really eye-opening for me. And so I kind of latched on to real estate as being my ticket to freedom, and just decided I was going to go all in or nothing. At that point, I really had nothing to lose, right? Like I had a bunch of debt, couldn't get mortgages, didn't have anything really to my name. And so for me to just commit, I was like, it cost me nothing but my time and my energy. And so I started going to networking events. I started just like going to open houses and educating myself and just like really immersing myself in the world of real estate to the point where like I just made it everything. Every minute I wasn't working at my job, I was just studying. I was at networking events to the point where I was finally able to get my first like joint venture with someone who passively invested with me. And then from there, once I kind of knew I could do it, I just doubled down and managed to get out of my job in about a year, which I can't say is easy or maybe the most like fun thing. Definitely consider that before you do it. But yeah,
so
that's
what did that light bulb go off for you when you did that joint venture?
mhm.
What made that light bulb go off for you that you could do this?
So it's kind of funny because I was introduced to the whole concept of joint ventures so I joined the RAIN network in Toronto and I was reading, Russell Westcott's books and just all like the different literature kind of promoted by the group. And I was like, oh, like JVs, this sounds so cool. But to me, I didn't know anybody doing joint ventures. I didn't know anyone investing with partners. They were just, individuals who had a lot of money investing. So to me, the whole concept that you could own 50% of a building and not put in any capital, it just seems so far-fetched to me. It seems so unrealistic. And but I saw everyone around me doing it, but they were a little older than me, a little more experienced. And I started telling my friends and my family, I thought, guys, I'm going to do joint ventures. And they were just like, what's a joint venture? What the heck? Why would someone give you 50% equity? This is so stupid. And nobody had faith in me. Like nobody believed that this was even a thing. And of course, they weren't educated on it either. So why would they even think that this was a way of,
Absolutely.
of investing? So when I finally did my first JV, it was like finally just like proof to myself that it is real, that it is doable, and that even someone that didn't have a huge track record or had a ton of cash could do it. So it was pretty fun.
That is awesome. So you proved
Yeah,
to yourself that you could do it. You can, it's a paradigm that nobody think about, right? You
exactly.
using someone else's capital and borrowing power, buying power
Yeah.
to get to acquire an asset and have 50% of that. So what
Yeah.
were some things that you did along the way that you would that worked for you that allowed you to do this, especially because you're coming from a corporate aspect where people don't think about this, people aren't talking
Yeah.
about this. What were some things that allowed you to make this happen? Because it seems really impressive on the first go, especially with where you came from.
Yeah, so I would say just kind of like immersion around being like around the right people. And that comes from two things, right? Obviously, there's the mindset component. You know, they say you're the extension of the five people you spend the most time with. And I think that's really true, right? Putting yourself in the rooms with people who are so much farther ahead of you that you can't help but just be inspired and motivated. And plus, you see them doing things firsthand, and so you know it can be done, right? It just keeps pushing you. But from the other side is just being exposed to different and new ways of thinking. I'll never forget, the first time I went into like a real estate networking event, and everybody's talking about financial freedom and creative financing and quitting their jobs, and I thought, this is nuts. Like, nobody around me talks like this. Corporate life, my family, my friends, nobody speaks this way. And so, and I find that true to this day. Now I speak very differently. And I think my friends and family still think I'm a little crazy, which is fine. But it was just exposure. And then like through that, just getting the right education, getting the right friends and the right contacts and the right mentors, it just gave me the confidence to keep building momentum, like over time. But also it was constant reinforcement that I was on the right track, because when you do something new for the very first time, even if like, that one JV, it was a success, I still doubted myself after that, right? Can I replicate this? Can I make this a full-time venture? Can I actually quit my job and get financial freedom? Sure, one time is all well and good, but can I make a business out of this? And every month I would keep going to these networking events and keep surrounding myself with people talking the way they were talking. It gave me the confidence to also just keep going, even when things felt hard, that the end was, the lights at the end of the tunnel at some point.
Incredible. So you definitely got inspired
Yeah.
and motivated to keep going, especially that you've changed a certain way of thinking and you've made that successful.
Yeah.
So I know you have about $50 million of real estate right now in holdings, I believe,
Yeah.
right? And
Yeah,
investments.
I
That's pretty
do.
impressive.
Thank you.
So if someone is getting started or they're looking to understand that skill of raising capital or just
Yeah.
helping people use their money in the right way, what are some things that they should really know and be cognizant of, you think?
It's a great question. So I would say, I find that there's really no difference in raising, like $100,000 or like $10 million. And I think a lot of times, like the extra zeros just throw us off in our head, like from a mindset perspective. But it's really interesting because now, having raised money, we're doing some like large syndication deals and some stuff in the US. At first, even I was a little intimidated. I was like, "Ooh, that's a lot of zeros." But the investors ask the same questions. They have the same concerns. They have the same outlook. It's just obviously a different pitch and different financials, and there's like that confidence and track record there. But at the end of the day, honestly, like I have the exact same conversations with a guy wanting to give me 100K and someone wanting to give me 1 million. So it really comes down to your product. And I tell this to like a lot of investors. We often do this backwards. We get so fixated on how to finance things that we forget that, like, if you had the money, what would you do with it? Like, are you confident in the product you put it in? And that comes down to your education, and that's your part of the piece, right? Like, if you're not going to bring capital to the table, it's your knowledge, it's your education, it's your power team that they're buying into. So that's the main part of focus. And that's what I always recommend when people are getting started and they don't have a massive track record. It's like, focus on that first. Focus on knowing your market. focus on knowing your product, your strategy, your type of real estate, and the money is there. Like the money will come, and those conversations, they get easier over time the more deals you do. You just have to like put the time and the energy into education, figuring out your strategy first. And then, once the track record goes, raising that level of money over time, it actually feels easier, to be honest.
That's incredible. So really knowing the product,
Yeah.
eliminating any limiting thoughts about the money, like as if you had unlimited capital, what would you do?
Yeah.
So those conversations, because you hear a lot of limiting beliefs. In fact, the other day I had a conversation with someone saying, well, that's a full-time job, managing people's money, you're gonna have these conversations. What if they don't
Yeah.
have something happens and you have to have a tough conversation? What do
Yeah.
those conversations look like? Because I'm sure that
Oh,
not a lot of
yeah.
people understand what those are.
For sure.
What are
And I
those?
mean, it's a good point to bring up because you know what, doing joint ventures and syndications, they're not for everyone. It is a lot of work. I have a full-time staff. There is a lot of conversations. There's a lot of relationship management, is what we call it. So I have like essentially like like client coordinators who are pretty much exclusively involved with just answering investor inquiries, dealing with questions, concerns, just ongoing updates with our JVs and things like that. So it is something, it's a commitment to being involved in those relationships, because that's what it is. It is a long-term relationship. And just like any other relationship in our life, it needs to be monitored. It needs to be nurtured.
Nurtured, yeah.
And I have had some tough conversations with this past year of what's happened in real estate. I probably had some of the most, tense or intense types of conversations with investors where a lot of money is on the table, and the minute capital is on the line, there's tension there. There's high emotions. Everyone's a little scared. Everyone's a little upset, right? So it's really just, I think, about creating the right expectations and the relationship from the beginning. Because of all these hard conversations I've had with my JVs, we've always been able to navigate it, because from the get-go, we set the expectations of like, who's in charge, how does this relationship look like the values that go into how I run my business and how I deal with my investors. That is truly the dictating factor, that when stuff goes wrong, they know that they can trust me. They know that I have their best interests at heart. And so that kind of changes the tone of things. So yeah.
I think so. So setting that right expectations
Yeah.
along the journey. Now that you've done it a few times, you understand how to set those
Yeah.
expectations. I know transparency is one of your core values,
It
right?
is. Yep.
Integrity, innovation.
Yep.
Um, so I know with growth, obviously, let's dive deeper a little bit about. First of all, actually, I'd like to touch on the financial literacy piece.
Oh, sure. Yeah.
One of the things I'm really passionate about is rewriting that story of generational wealth and knowledge. So
Amazing.
helping people understand how money can be used. Should someone consider the joint venture model, and why or why not? And the
Mhm.
other thing is financial literacy. What can we do to rewrite that programming of money stories to allow people to have financial freedom?
Ooh, I love that. That's honestly one of my passions too. Like, honestly, it's why, like, on my social media, I'm always talking about how we talk about money, how we conceptualize money, and just trying to spread it to the masses. Because if I had known what I know now, like a decade earlier, my God, like I can only imagine what my life would be like right now, or even in high school, teaching kids how to save, how to invest, like credit scores. I mean, I was one of those kids that got a credit card at 18, not understanding that you had to pay it back, like just charging. And oh no, now I have credit bills. What the heck? Like how stupid, right? But it's crazy that they let us have a credit card, and they don't
Yeah,
educate us on how it
they're
works.
breeding, they're almost breeding the consumer mindset, right? I remember Alfonso saying
Constantly stuck.
96% are consumer and 5% investor,
Yes.
right? So
That's right. It's so true. And like now, I think it really just takes like one person in one person's circle to really impact them, because I see the way my family talks about money now, my husband's family, our friends, because like it just comes up in conversation. Not necessarily like I don't preach investing or real estate to them necessarily, but I hear the way they talk about money, or I hear the way they'll say certain things. And I'm like, don't say that, or like, no, it doesn't work like that. And just kind of, over the years, it's slowly started to have an impact. So I really think it's like, if we can just spearhead initiatives that it's like even just one person in one family becomes really financially literate, the ripple effect from their kids, from their spouse, from, everything moving forward, it's kind of like, it's like that, almost like that pass it forward kindness kind of thing. It's like you can pass ahead that financial literacy. And to go to your question about joint ventures, I always love to say it, although I use them, I was in a very specific situation where I didn't have credit, I didn't have capital, I kind of had no choice. It was sort of, this way or just wait and try to save up money. And I was not a patient person. So I view joint ventures as a stepping stone. Now, some people use it as a very long-term strategy. I like to see it as it was kind of like a point of time in my life where I could leverage, their expertise and their resources. They could leverage my time and my resources, and together, we grew this amazing portfolio. But the idea is that, like, after 5 years, the JVs are supposed to dissolve, right? They're supposed to be sold or refinanced or whatever the case is. And then you kind of just go into the second phase of your life. So I think a lot of people get so caught up on this idea of giving away 50% of the profits and 50% of the equity, but just know that it's not designed to be forever. It can just be a stepping stone in your journey. It doesn't have to be a forever thing. But if you get really stressed out at the idea of being kind of beholden to someone, relationship management scares you, having those tough conversations scares you, that's something to really be honest with yourself about, because that kind of comes with the territory, unfortunately.
Right. So you mentioned JVs being a stepping stone.
Yeah.
What would be then the next step? Because I'm thinking you're still using JV money and other people's money to grow and
Yeah.
help them grow as well. So what does that next step look like then if JV is a stepping stone? And what do you do with your clients that are doing a first JV and moving on past that?
Yeah, so I am at a point in my portfolio where we're actually transitioning out of a lot of our GVs right now. So that's an interesting journey and experience in and of itself. For the first, 5 or 4 years of the business, it was acquisition mode, like just 24/7, head down. That's all me and my staff did for 4 years straight. And now it's been a very interesting transition as the market shifted, as things changed. It was coming towards 3 to 5 years for a lot of my JV. So it was just it seemed like a very natural pause for all of us to kind of take a step back and say, okay, where are we at? What properties are performing well, what's maybe not doing so great with like the current interest rate climate. And we decided to actually liquidate a substantial amount of my JV portfolio with the idea of economies of scale. And this was always the plan, but it's dovetailed really nicely with our transition to the US as well, where we're essentially just reallocating the capital. So we made our equity, we, built this beautiful, portfolio with all these amazing partners, liquidated the ones that everyone was kind of on board with. And then we are taking the capital and reallocating it into larger apartment building assets, some investments in the US. Now I am still doing syndications, which I do find slightly different than JVs. But for the most part, just single one-on-one JVs on like residential properties. We're not doing any of those right now anymore. Yeah.
Okay. And for our audience, explaining syndications, because I know I
Yeah.
get your excellent marketing material about opportunities coming up. I was like,
Yeah.
great. So tell our audience a little bit about syndications. Why is it important? What is it?
Absolutely. And kind of going back to your point, it's like this is kind of, I would say, for someone that enjoys raising capital and wants to continue using OPM to scale their portfolio, this is kind of the evolution. I feel like the joint venture is kind of like the starter package. It's just you and one JV on one property. They get the mortgage, they go on title. You guys have this nice little happy relationship for 3 to 5 years. You sell the property and everyone's happy. Now, syndications are kind of like the next evolution. And the reason we do it is I can tell you guys that at one point, we had like 67 different joint venture projects on the go, and it was a lot. We realized that closing a fourplex is really no much more effort than closing like a 20-unit apartment building. And we're smart, savvy business people. So we were like, well, it makes more sense to, start to transition into bigger buildings, more doors under one roof, all that stuff. So we did realize, however, that it's probably not going to be just one partner on a deal. If we're doing like a 1 million or $5 million capital raise, it's going to have to be a pool of investors. And so that's where we moved more towards the multiple, like the general partner limited liability partnership model, where now we're taking on, let's say like 5 to 10 investors as the capital partners on a particular deal. The reason it's a little different than joint ventures is that typically they don't go on title.
Right.
So
I was just gonna ask that. Okay. So
yeah,
they bring money pool into whether it's their RSPs or whatever
exactly.
into trust or whatever to invest with you as
That's right.
syndication as part of it.
Yeah,
Got
exactly. So it's a beautiful model because, there's no more worrying about who's getting the mortgage, are they qualifying, who's going on title, because there's a bit of a power dynamic when it comes to that. This way we have a lot more control as the general partners, or the managing partners, if you will. We get to go on title, we qualify, we guarantee the mortgage, and then they're essentially just passive, silent investors. So they have to trust us too. There's a caveat. If you guys, as passive investors, like a little more control, a JV might be better for you because as an LP, they have no voting rights. So essentially, they don't get to make decisions on renovations or tenanting or anything. They're kind of just along for the ride and trusting us as the managing partner to captain the ship accordingly. So it's just a different dynamic, but one that we like because it's very scalable. We can do bigger buildings faster with, more money, more partners. So yeah.
That's incredible. So really, now you mentioned this is sort of a stepping stone. You have a little
Yeah.
bit more control with syndication. You've probably built up enough capital with your team and everything to
Yeah.
have to do that. Is that the reason that why that's important to be able to start with JVs, build that capital a little bit so you can do the syndications after?
Yeah, I mean, hypothetically, there's nothing stopping anyone from doing a syndication right from the get-go. But again, I think like going back to that idea of like they're trusting you to helm the ship. If you don't have a track record as well, I mean, it's going to be, when you're doing a JV, they're on title. They do have a modicum of control and say over, what happens
Right.
on that project. Whereas they're just kind of getting put in the pool in a syndication with very little say. So you have to have, I mean, utmost confidence in the ability of your GP. And so I think doing multiple JVs first gives you, like you said, like kind of, the capital, the net worth that you're going to need, but also the track record to give confidence. Because, now you're not just raising a couple 100,000, you might be raising 3 to 5 million. So, I mean, these LPs are going to be asking some tough questions and they're going to want to see a bit of a track record for sure.
Absolutely numbers oriented, driven type of personality.
Yeah,
Definitely a lot of different energies in that room, right?
absolutely.
Wow, that's amazing. So really, you're using like you have a track record. I'd like to ask you as well.
Sure.
What do you do to show that track record?
Hmm.
What's one thing you teach your students in Freedom Builder? I know you will talk a little bit more about that.
Yeah.
Your program teach them to structure a JV or show a JV product so someone can
Yeah.
invest with them. What are some things, the tactics that someone can do to really help them raise capital or show off their track record and
Yeah.
get more investments?
So it's the one thing that everybody knows I'm going to say, but they dread it so much, which is
Networking.
social media.
Wow.
The minute everyone is like, oh no, I have to go on camera, I don't want to do it. But I think, I'm such a big believer in delegation, right? And getting the biggest bang for your buck. That's why, I mean, literally the whole story behind syndications and JVs is that idea of economies of scale. And the idea is like, look, you can go to networking events, you can do capital raising organically, which I also encourage. Like, you shouldn't just be getting all your capital or building all your relationships from just one place. Go to networking events, go meet people in person, go to galas, go to, like Rotary Fest, like places where, entrepreneurs are going to be, or people that have a high net worth. But at the same time, if you want a big bang for your buck, you can start a social media channel, Instagram, YouTube, whatever the case is, and have, a few thousand followers like in a very short time.
Wow.
So, which is kind of great, right? Because if you spend a lot of time and are dedicated to that process, now every day when you post about that new flip you just did or that new duplex conversion you just completed, you get thousands and thousands of eyes just at the click of a button. So I'm really big on, have a good presence on social because that's going to get the biggest exposure for you in the shortest period of time. But also, you kind of mentioned about like the pitch too. I'm such a big believer in branding. Like, have a website, have a logo, have a pitch deck, because going back to scalability, and now I have to go raise $5 million, they want to see investor decks, they want to see presentations, they want to see pro formas. And if they Google me, ideally they'd probably like to see that I have a website and proof that I exist on the internet too. So that's really important.
So that's great because a lot of people do think that social media, they don't get the immediate return and they think, you know what, I'm just not going to work on it. But
I'm not going to do it.
I
Yeah.
feel like it's a slow burn. I feel like you get in people's subconscious mind, you create a
So
community,
true.
and then all of a sudden now it's almost like warming up to something, to a product, to some
Yeah,
solution, I guess, right? So,
absolutely.
so that pitch deck or that, what do you, when you teach your students, what's who gets the most benefit out of Freedom Builder or your program? And do you go over things like this pitch deck or performas, or how someone can really show off to an investor what they should be looking for to raise more money, et cetera?
Yeah, no, that's a great question. So, I would say I decided to start Freedom Builder for kind of like an underserved demographic of investor, which is the middle investor. So I feel like, there's so many great programs like Rockstar and Keyspire and all these amazing programs for just getting the word of real estate investing out there. And there's a lot of advanced programs, but I was like, well, what about the guy who's got 2 or 3 properties and wants to start this into a full-time business? What about the investor who is stuck on duplex conversions and wants to do their first apartment building? Where's the education for them? And so that's what I decided to do is build this into a mastermind that's scalable for like the intermediate investor who wants to just turn this into an actual business that they can retire off of. So I'm big on, we do investor presentations in the classes. They get to practice their pitch actually in front of the class, which I think is super beneficial. And we do a lot of case studies too. I think that's also something that I get messaged a lot about on social, is people only get to see the end product. Ooh, that apartment building looks great. But what about the behind the scenes? How did you structure the deal? How do you do the financing on it? How did you position it to investors? So we do a lot of that, going into all the nitty gritty about the creative financing and how we structure it for investors so that they can really see kind of like all the ABCs behind everything. Yeah.
Okay, so it's for the intermediate investor kind of stuck on the 1, 2 properties.
Yeah.
Maybe they're over leveraged in their name. They have a couple properties. They need to scale up somehow.
Yeah.
They definitely don't like maybe where they're working in a corporate job.
Yeah.
Maybe they like to escape that at some
Yeah.
point. So what's 1 or 2 things that they could maybe they need to overcome in order to do that? Because they have they've done it once or twice.
Yeah.
They'd like to I guess escape that role. And then the
Yeah.
other part of it is, what kind of plan or how do you map out their business, their financial,
Ah.
picture, so they can have a goal and a set plan? Okay, I'm going to retire at this amount for this passive income kind of thing.
Oh, I love that question. I actually just had a conversation with one of my coaches today about that exact thing. And we were working with some of the students on like mapping out these like kind of financial plans, like you were saying, because it's true. Like, I think a lot of people get into this headspace where they're like, I just need 100 doors and I can retire. And my question to them is always, well, how much income do you think you're going to generate from that 100 doors? And oftentimes they are like, I don't know, millions of dollars. They have no idea about how much it's actually going to make them. And it's so, so important that for people that want to quit their 9 to 5, they need to realize 2 things. One is that it's probably not going to all come from rental income. There's going to have to be some active income component to this if you want to quit your job quickly. That's because, real estate cash flow, it's a slow burn. Like building up $500 a month here and then $500 a month there. Like it's a slow burn to build up a portfolio. But that's why you see people who are doing this full time are also realtors, mortgage brokers, flippers, wholesalers, some element of active income that's helping them replace their 9 to 5 income so then they can spend more time doing real estate. So I always like to set that expectation for people that, look, you can do this by building a rental portfolio, but it's probably going to take you 5 to 10 years. If you want to speed up the process, you're going to have to inject active, capital from somewhere. Um, and then in terms of mapping it out, it's actually not that complicated, because what we
Yeah.
do is, if you say, okay, I need to replace $100,000 salary, well, we know that the average flip can make you, I don't know, let's say 50K in
Okay.
profit.
Yeah.
And we know that the average duplex, maybe nets you $500 a month in cash flow. And
Okay.
then we know that Airbnb arbitrage might make you A, B, and C. What we've done is kind of like, we break down all the different strategies of, what that kind of net income could look like.
Mhm.
And then we just say, okay, where's your preference? Where's your risk tolerance? Like, I hate renovations. Okay, well, we're going to keep you away from flips. But they're like, well, I really love design. Great. Maybe Airbnb management or Airbnb arbitrage might be a good fit for you. And then we kind of just reverse engineer the whole thing. But I think it's important, like, it's not quantifiable, but that idea of your strengths, your risk tolerance, and your passion is also really important to consider, because I see a lot of investors just doing stuff to make money or for the sake of doing it, but then they don't enjoy it. And it's hard for them to keep going because they're not aligning with the strategy that they chose.
Right.
Yeah.
It almost reminds me of Strength Finder, right? Like, hiring someone in their strengths, what's going to give them energy, right? If you
Yeah.
hire, an administrator to do sales calls, they're going to be burned out in an hour, right?
Yeah. They're going to hate it.
Yeah, we
100%.
had that too. We had someone that we're hiring as a salesperson, and within an hour, just looking at his phone, just I don't know what to do. It's like maybe I'm not the right one for the role, right? So it definitely makes a lot of sense.
Yeah.
So you're doing stuff in the States right now. Are you still finding that it's a good time to maybe invest in Canada as well? Like, what are you thinking about that when it comes to investment here?
I get a lot of questions about that. And I always take a very balanced approach, because, my philosophy is that there's never that greener pastures. There's never this holy grail in real estate. And I know people are just leaving Canada in droves because they see all of us going to the US, but they also have to, consider that this is like a carefully crafted plan over time, where we did a lot of analysis. We got all the legal entities set up. We have a very specific strategy that we're employing. And we have this all mapped out. I think people like to just kind of sometimes go for the shiny object, ooh,
Right.
Northern Ontario, oh, Alberta, oh, the US, right? They're kind of chasing. And I think people need to sit and kind of just evaluate, like, are you even comfortable investing cross border? Are you prepared for some of the challenges that come with investing in a different country? The double taxation, which we can mitigate, it's okay. But there's also like the financing challenges and all of that. So some people might feel a little more comfortable with having, properties in their backyard, so to speak. And I do think there are still plenty of opportunities in Canada. We are still investing in apartment buildings in Canada, a little more selectively, albeit, but we're still finding good deals. We're mitigating the laws and all of that stuff, but definitely, I think there's opportunity almost everywhere. It comes down to, like, what's your comfort level? What are your goals? And, being realistic about your actual outcomes that you want out of your portfolio.
Okay. And when you structure the deal, I mean, does that depend on each deal? Does it depend on, the JV with the lawyer and, writing that up, getting that up, or um, I guess regarding JV and syndication, just briefly, if you can just go on that, like how you structure that deal. So I guess how you present it as well to the partners, right?
Yeah, 100%. Yeah, and so I mean, it's definitely like tricky. Like, I feel like every commercial deal is like its own thing, and depending on like whether we have like a VTB, how much equity we need to raise, how long the project is going to take, it's very tailored, to each project. And so we kind of take like we definitely don't do like a one size fits all approach. We're very dialed into the project itself. And, we rely heavily on our like mortgage brokers, our lawyers, our accountants to really guide us and figure out what is the best structure for us, for the partners. Because the idea is like, we want to find the most efficient path that's going to get the highest return for our partners, but also be the most stable and safe type of structure as well. And there's a lot of different entity structures that you can use. And I think it's just a matter of, again, experience, right? You have to test out a few, see how it goes, and also really rely on your power team. Like my lawyers and mortgage brokers, they give me a lot of insights, and I rely heavily on their input when we're kind of putting together a strategy.
So your power team, obviously very important to have, great people in different areas, as well as what are your thoughts on, mentorship? I know that you're big on mentorship, you provide mentorship.
Yeah.
Why is having a mentor important, especially for avoiding mistakes or seeing blind spots maybe that you didn't know you had?
Mhm. Honestly, I can't emphasize enough like how important having a power team is, especially as a beginner. Because if you're trying to raise capital or you're trying to build up this track record and you don't know where to start, the obvious point of entry is relying on the expertise of people who are around you. So if you don't understand financing and you don't understand how to find off market deals, or you don't understand how to negotiate a deal, then you find the best in the biz and you lean on them. And people think probably today that, well, Sarah doesn't need a power team. She doesn't need a mentor. And I do. I have two mentors right now. And I rely on my power team probably more than ever because we're starting to do, like 10, 15, $20 million deals. And, you start to get to a level where you want multiple sets of eyes and input and advice because it's so complex that I feel like now I honestly use my power team more than ever. And you shouldn't be the smartest person in the room. I shouldn't be the smartest
I agree.
financing person because then I should fire my mortgage broker.
Yeah, and if you have all the job, if you take all those jobs back, like non-talent gives you your job back, so you'd have to do all those jobs for yourself. So it's good to have that power team, like you said, to do that at a high level.
Yeah,
You,
exactly.
you had mentioned economies of scale as well.
Yeah.
Economies of scale, what does that mean to you, and why is real estate investing important as a great vehicle to build a
Mm.
legacy and the generational wealth for maybe for your future life and building a life by design, I guess.
Yeah. So I think economies of scale is so important. Anyone who's already started their portfolio will know that it's really hard to do things on your own, to be kind of like the jack of all trades. You're the one finding the deals. You're the one raising the money. You're doing property management. You're the decision maker. I would say, it's getting to a point where you can start to delegate, where you can start to like just trust people in their own zone of genius so that you can focus on doing what you do best, and also buying back this idea of time freedom, right? Like we think when we build a real estate portfolio, we're buying our time, but only if it's done correctly, because I've seen it done incorrectly and you end up working just as many hours as a regular job, which is not the point. Um, but the beauty of real estate is with leverage, with the cheap debt that we are allowed to take out from banks to buy buildings, the abundance of capital that's out there. People think they think it's crazy how many doors I purchased in such a short period of time, but realistically, I mean, we're borrowing even today 6% on debt, on loans, which is nothing in the big scheme of things. And as you grow, being able to buy 50 units at a time, that's most people's annual goal in one shot. That means I can do one transaction a year, hustle for like 2 to 3 months, and then like take the rest of the year off. So it's really going from tiny little transactions and thinking really small to thinking on a bigger level, like how can I build out a team that can support me? How can I do more things in fewer transactions and start to remove myself from the business?
So building that great foundation and not
Yeah.
building it on the wrong foundation. So you see that quite a bit, as
Yeah.
well as having the right power team in place so you can scale better and you can do more and have bigger transactions,
Yeah.
which means more income and potentially more time off as well, right?
Exactly. Actual time freedom. That's the goal.
Yeah, exactly. So with the leverage piece, and I know we got a couple minutes here, but with the leverage
Yeah.
piece, um, when is too much leverage? And the other
Mhm.
question I would say is for people that are, starting in that 2 to 3 properties realm,
Mhm.
what would be something that if they're not necessarily their goal is to buy hundreds of doors,
Yeah.
and buy massive apartment buildings, what's sort of what's sort of something that they can do to start
Hmm.
and build a portfolio that they can have their life by design?
Yeah. I would say, focus on quality assets and quality areas because if you don't want to own hundreds and hundreds of doors, and maybe you're not comfortable taking on a lot of leverage or a lot of risk, if you focus on the quality of the asset and you focus on picking good markets and properties in good neighborhoods, then you will never depreciate. It will always increase in value. You'll always have good quality tenants. You'll never have to worry about the landlord tenant board, or very rarely. And you'll always get premium rents. So that's like, I always suggest clients that are like that going to, Kitchener-Waterloo or the outskirts of the GTA, where, yeah, it's a little more expensive to get into. But I mean, I know some people who purchased 15 houses in Mississauga 15 years ago, and they're retiring millionaires today. So I think that's doable if you're willing to kind of just like stick in the game and ride it out, pick really good quality assets. You can absolutely have a phenomenal portfolio. And also think about mixing in some higher cash flow properties in there too, maybe like a student rental or like an Airbnb or two. There's some Airbnbs in our portfolio that cash flow almost like $2,000 a month. So a couple of those and you're in good shape. And that doesn't need hundreds and hundreds of doors to, get to $5,000-$10,000 a month. And in terms of the leverage component, so I think it's just important to understand how much debt you're actually comfortable with, and the good debt versus bad debt. So regular bank mortgages, good debt, they're secured against equity. But then when you start to get into second mortgages and RSPs and prom notes and things like that, they're okay, provided you have an exit strategy. So as long as you have a buffer, as long as you know how you're going to pay that money back and you have a secure base, then go ahead, take the HELOC, take the loan, take whatever. Just know that all of that has to get paid back someday, and you have to have a very clear strategy on how you're going to pay it back.
That's excellent. So you help your students navigate that as well, I suppose, right? With your mastermind and things like that.
Absolutely. I'm such a believer in creative financing as helping people get ahead, particularly people that don't have a lot of down payment money saved up, or they want to scale a little faster. Yeah, we help them analyze in a way that will get them ahead without over leveraging them, and making sure that they have a plan to pay back some of this debt.
That's a great point with an exit strategy. You hear that over and over again with,
Yeah.
construction. What's the exit strategy with this money that we're taking? Like you said, HELOC or whatever. And I think most people, they don't have the financial education piece, so they don't know how to service the debt, or they don't have a plan. And then they're stuck either over leveraged, and then they have these limiting beliefs about investing because they didn't set the right foundation, like you said.
That's right. 100%.
Awesome. So what's next for you? And tell us a little bit about Freedom Builder and where people can reach you. We'll make sure we have your information in the notes as well.
Thank you. So what's next for me? I'm coming into a really neat transition in my portfolio where I have a staff. I am starting to get to that financial freedom place where I don't have to work as many hours. And although we are planning some big stuff, we're doing really big transactions in the US, we're starting our fund and things like that. I'm looking at, kind of like I was mentioning earlier, it's like, doing a few months of hustle work, buying a few large deals, and then kind of taking the rest of the time off. So I'm still wrapping my mind around what it's going to be like to not work 50 hours a week and take some time off with my husband. But we're looking forward to kind of like another chapter where we're still doing big things, but we're doing it with more intention, where we're going to be doing it from the beach. We're going to be doing it with, more time for our friends and family. And that's honestly, like, that's the whole foundation of Freedom Builder, this mastermind that we started. I'm such a big proponent that I don't like to count doors. I don't like to, have people compare. Like, I don't think that someone that has 10 doors versus someone that has 100 is any better. Like, I don't think one is more financially better off than the next. And I think the competition is horrible. It's such a bad precedent. We see it on social media a lot. And so in Freedom Builder, it's really just about helping people, just meeting them where they're at. Like, if you're stuck at 2 doors or 20 doors, it doesn't matter. We can help you just navigate how to build a better life, whatever that looks like. If it's cash flow, if it's getting out of your 9 to 5, it's just helping you build out the strategy and the plan and the tools. I think that's what's lacking for so many investors. It's that plan.
I love that, Sarah. Well, it's been amazing talking with you. Lots of notes, lots of knowledge.
Yeah.
Really, really greatly appreciate your time. And we look forward to seeing what you're doing. So it's amazing.
Amazing. Thank you so much. It's been a pleasure.
Thanks so much, Sarah. Have a great one.
Thanks, you too.